Welcome back. This is Corporate Radar. Well, a quick check on the markets. We've moved to the high point of the day, and it seems that some of these pharma-related names are actually outperforming today. Oro Pharma has moved higher. Gland Pharma is doing pretty well. Zydus Life as well is higher in today's trading session. So the pharma index itself should come off you. That's doing an outperformance in today's trading session. But as promised, let's get chatting with the management of GMR Airports Infrastructure. Remember, they announced a group restructuring where they'll merge GMR Airports Limited with itself. Mr. Saurav Chawla, the Executive Director of Finance and Corporate Strategy, currently at GMR Group, joins us on the show. Hi, Mr. Chawla. Thanks so much for joining in. Well, explain to us the entire restructuring process. How are you simplifying the corporate structure? And also, GMR Airports Infra continues to stay listed, right? What assets will it hold? And are all these assets of GMR Airports being transferred to the listed entity?
This is not a restructuring of GIL. It is merely a merger of the 51% subsidiary of GIL, which is an unlisted entity in which Group ADP holds 49%. This entity is being reverse merged into the listed entity, which is GMR Airports Infra Limited. So this is just merely a merger exercise. And basically, it allows the minority shareholders of the listed entity to come closer to the operating assets. These operating assets, as you may be aware, are entities like Delhi Airport, Hyderabad Airport, Goa Airport, and many other airports across the world. That's the only exercise that is being undertaken.
Okay, so I won't call it a restructuring, as you said. Let's talk about the rationale then for this reverse merger. And also, what is the total outstanding debt from Group ADP, any sort of payment outgo that could be pending? And also, how much will this entity, Group ADP, how much will it actually hold in the shareholding of the merged entity?
It's a collapse of this structure from a unlisted to a listed space. And the rationale is that, number one, it strengthens the partnership between Group ADP and GMR at the listed level. This is extremely important to understand because previously the listed entity only had 51% shareholding. And now every partner, every shareholder will sit at the same level. Post the merger, the paid-up equity capital will be shared between the GMR family. They will have about 33% shareholding, little more than 33% shareholding on a paid-up capital basis. ADP will have slightly lower, which is about 32% of paid-up capital, and the balance will be held by the public. The other rationale of this is, if you look at the finer prints, ADP has agreed to settle the earnouts that we had agreed with them when they initially came in as a 49% shareholder in GMR Airports Limited. These earnouts were where GMR Infra could earn, depending upon the economic milestones achieved over a period of 5 years, anything up to 8% of equity and about 1,060 crores of cash earnouts. What we have agreed is to settle with them these commercially to facilitate this reverse merger so that the minority shareholders of GMR Infra can further gain as we grow our airport businesses across the world.
Mr. Chawla, what is the total debt in the books currently? How will the debt picture look like post fundraise via FCCBs, and what will it look like post the merger, the reverse merger?
The consolidated debt, gross debt, is about 299 billion rupees. Cash equivalents today on a consolidated basis is about 50-odd billion rupees. And these numbers that I'm talking to you about, these are as on 31st of December 2022, because that's the time when the last public disclosure of our balance sheet numbers was made. Of this, 93% of the debt is actually by the airport assets. So, Delhi Airport and Hyderabad Airport, they have these debts on their books. About 7% of it, which is about 19 billion rupees or 1900 crores, as on 31st of December, was the corporate debt. So what we are envisaging is through this FCCB, we will extinguish this 19 billion rupees of debt, which was standing in the books, and hence the holdco, which is the GMR Infra, which is the listed entity, will, from a corporate debt perspective, will get extinguished. That's the plan.
Okay, give us some further clarity then. In the merged entity, give us a breakup of the revenue of operations. What will be the non-airport revenue? And what is the breakup of aero, non-aero revenue split? Give us further clarity on that.
Airport versus non-airport has to be looked at asset by asset basis. It's not something that you have to look at on a console basis. You will have to Delhi Airport, for example, has a aero business which is about 23% of overall revenues, whereas the non-aero and the commercial real estate business, that's about 62% and 15% respectively. In Hyderabad, the aero is higher; it's about 64%, whereas the non-aero is about 36%. So you have to go airport by airport. You cannot look at a console basis because that will be misleading.
Okay. Saurabh, also give us a idea about the Andhra airport. What are the timelines? When do you hope to operationalize it?
The land acquisition at Bhogapuram, which is the Vizag and Vishakhapatnam in Andhra Pradesh, is almost completed. We are awaiting the formal handover of the land over there. Expression of interest for EPC has been received, and we expect RFPs to be issued very shortly. We are currently working out the financial closure. Hopefully in next month or so, we will be moving ahead. Post financial closure, it will take anything between 30 to 36 months to complete this asset. And we will be moving forward in that particular direction. So still, I would say early stage and another 3 years to go before this new airport in Bhogapuram gets completed.
Mr. Chawla, could you talk to us about the growth ambitions in the domestic business? Which sectors in terms of geographies are you targeting? What other international airports are you looking at? What are the options as far as the Philippines airport business goes?
Just purely directionally, I would say, and this is something which we have already alluded to in our quarterly calls. The domestic business in the airport has come back with a bang. We are on a run rate basis. We are above the pre-COVID levels. On the international side also, on our airports, we are almost close to the pre-COVID levels. There has been some lag as far as international traffic is concerned from countries like China, from Hong Kong, from Japan, because these countries were shut for air travel. But now as they open up, there is increasingly there's business emanating from these parts of the world also. But generally, I would say we are ahead of the pre-COVID levels. Going forward, it's very clear that the airport business is in for a good run over the medium term, and when I say medium term, I would say 10 to 15 years. And what I would allude to over here is that look at what happened in China when their per capita income was about $2,500 per person. As that per capita income increased, there was an explosion in air travel. Aspirational travelers, people who were used to earlier travel by train, they all started to opt for traveling by air. And this is notwithstanding today the high airfares. As airfares also get corrected over a period of time, new airlines start operations, and very importantly over here, as Air India revamps its balance sheet and its operations going forward, you will see much more capacity availability in the aviation sector. So it's all positive as we go forward from the airport business perspective. What is left is, okay, what are the new airports that we want to target? Well, obviously, the government of India has announced its aspirations to privatize many more airports. We will surely look at them very carefully, but we will be very selective. We are going to be very conscious as to what kind of equity value that gets created at what price, and we'll be very disciplined in that particular approach.
All right, Saurabh, thank you for joining in this morning and giving us a lot of detail on that reverse merger and, of course, the business and how you see some of these trends shaping up. Thanks for joining in. That's a word from GMR Airports. Now we will turn back to some of the announcements that came in with respect to the finance bill amendments on Friday, and more importantly, the ones that didn't come through. Now, according to what we understood as the finance bill was finally passed, no changes have been made to the ambit of the angel tax proposals, which were announced on the 1st of February when the budget was presented in the House. The remit of angel tax actually has been extended to include foreign investors or other investments that are made by foreign investors. So what sort of an impact is this going to have on the entire startup ecosystem? Is it a big blow? Well, let's get some perspective going with Saurabh Srivastava, co-founder and former chairman at NASSCOM. Mr. Srivastava, thank you for joining in. Now, much against the industry's wish, the government hasn't relented, and now this angel tax, which basically for our viewers, just to explain, basically the differential between the fair market value of shares of an unlisted entity versus the value at which the investment is made, that differential is going to be taxed as income. It's income from other sources, and it gets taxed as regular income. And the tax has to be paid by the Indian unlisted company or startup. So, Mr. Srivastava, given that now foreign investors have been covered, this basically means that any investment that's coming in from foreign private equity, big foreign investors, that also gets taxed?
Yes. I mean, unless there are changes made, and I suspect some changes would happen. At least I hope that would be the case. They'll all get taxed.
Is there a workaround, so to speak? Because, even earlier, the angel tax rules aren't new. They have been in existence since 2012. Of course, the remit was only domestic investors. But even then, I think, if you are a category 1 or 2 AIF registered with SEBI, and these category of funds were exempt. So I don't know. I mean, can there be some sort of restructuring or smart structuring of these foreign flows in a way that it's more tax efficient? Do you see that happening at all?
No. See, foreign investors, VC funds, they don't end up creating entities in every country in which they invest. So if we don't tweak our rules to be investor friendly, what will happen is all of our startups, all of our companies will flip overseas because that's where the fund will create investments. So in some ways, this rule has the reverse effect of what we really want. We don't want our companies to flip overseas. If we put these rules which make it difficult for foreign investors to invest in India, then our companies will have to flip overseas to get that money. Because I should share with you that 85% of the risk capital, venture capital, private equity, angel investments, 85% of that capital that goes into the Indian startup ecosystem actually is foreign capital. I mean, if it wasn't for foreign capital, we wouldn't have had a single one out of the 100 plus unicorns that we have. So we are very dependent on foreign capital. So I think it's in our interest to make sure that they find it friendly to invest here. And really, actually, at the very least, we allow, for example, Indian VC funds, etc., that are registered with SEBI to invest. And so, in some ways, I think if we look at that list, we should say, look, if VC funds or private equity funds are registered or regulated in markets, or countries that are compliant with the Financial Action Task Force, or compliant with the International Organization of Securities Commissions, then they should be treated the same as VCPE funds registered on SEBI. And we should also extend that to say companies that are listed on stock exchanges abroad, again, where the FATF and IOSCO compliance exists. FPIs should be allowed to invest. Banks
Mr. Srivastava, just to understand, because you gave a very important number there, you told us that 85% of all investment coming into startups is actually foreign investment. So this could have very far-reaching consequences, obviously. At present, in terms of domestic investors, I think venture cap funds are exempt, right? We're also awaiting, I think, draft rules to come out, which will have more details on how this is to be operationalized. What clarity would you want to seek from the finance ministry? And as of now, till there's a rollback or a rethink, if at all there is one, how do you think the computation will work in terms of what is fair market value? I believe it was on discounted cash flow method up until now. Correct me if I'm wrong.
See, the problem is, yes, it's on discounted cash flow method, but the problem is that the tax authorities frequently look at what you've projected based on cash flows that you expected. And if you haven't achieved them, then they will relook at that valuation, which is completely wrong. Because you have to go back and understand when the valuation was made, what were the circumstances. And it's a very, very inefficient way of doing it. For example, companies in the biotech area, people who are doing drug discovery, they won't have cash flows at all, maybe for a decade. How do you value them? Today, if a startup goes to 3 of the world's best VC funds, the chances are each one of them will value that startup differently. So it's a very inefficient way of doing it, which is why no country in the world has got into government trying to value startups in terms of imposing angel tax. All countries have the same concerns about money laundering, all of this, but none of them have actually imposed angel tax. And quite honestly, if you look at it, we have enough rules and regulations that would take care of this.
Mr. Srivastava, I take your point. I think that was the original idea of introducing this tax way back in 2012 as an anti-money laundering sort of a measure to establish a tax trail. But very quickly, just a couple of seconds left on the chat now. Do you think NASSCOM would make a wider representation? Because now the bill has been passed. I mean, it is the new law from FY24 onwards. Are you really hoping for any kind of a change?
No, NASSCOM has made a representation. And many of the things I'm telling you are in that recommendation, because essentially our bureaucrats are amongst the smartest in the world. I think the only thing they need to do is this money laundering issue. Every country has it, but there's a reason why no country in the world has imposed an angel tax. So we have just taken a blunt instrument. It's like having a flyer on a glass table, and you swat it with a sledgehammer.
Mr. Srivastava, just a large quick point. Angel tax, funding winter, SVB in the US, it's been tough going. If you could just sum up everything in the last 30 seconds, is the environment looking very challenging in the new financial year for startups in India?
Well, the environment is certainly challenging because of developments overseas on which we have no control. And we do depend on 85% of our money from overseas. So if we make the environment more difficult here, then it's going to be very difficult for our startup revolution, which has just gotten started. So I would hope that we would look to replicate a Silicon Valley bank type instrument within India and really learn to take not a sledgehammer to solve these issues, but take a scalpel and solve a specific issue. Because I would just take 1 second to share with you that we have like more than half a dozen regulations already that deal with it. We have GAR, we have income tax if, source of funding can't be made. You have
Sure.
to disclose PAN, KYC.
Yes, absolutely. I think that's a point well taken. I think it's been made repeatedly by the industry that there are lots of anti-abuse, anti-avoidance measures. So why look at, literally increasing the tax remit? All right, Mr. Srivastava, we're out of time on the chat. Thank you very much for joining in with that perspective. We'll take a break on that note. On the other side, back with Mitesh, get some technicals going on the market.
इस बार टाटा आईपीएल जियो सिनेमा पे किसी भी स्क्रीन पे वो भी फ्री चल भैया
How do you start an iconic movement? Mannerism would say it's all about refinement and richness of invention. Classicism would say it's all about form and craftsmanship. Impressionism might answer, it's all about capturing the magic of every single moment. While Surrealism would find all of this quite, well, surprising. After all, it's about creating the icon of a new movement. Welcome to Forwardism. The new BMW i7 and the new BMW 7.
तू जब तक चैंपियन बनेगा ना इसका रंग उतर जाएगा रंग उतरा ये रंग तो वैसे भी उतरने वाला नहीं था
बारिश धूप और धूल से आपके घर को सालों साल बचाए ड्यूलक्स वेदरशील्ड पावर फ्लेक्स घर का चैंपियन
100% happiness with SBI Home Loans. Zero processing fee at 8.50% onwards. Apply today. Call 1-800-112018. Visit homeloans.sbi.
Okay, past 10 a.m. this morning, the market's up 60 points. What's doing it for, the markets on the upside is Reliance and the HDFC twins. HDFC Bank, HDFC Limited and Reliance Industries. These are the three big areas from where strength is coming. Mitesh is joining in with what he makes of the price action so far. Mitesh, good morning. So slightly above 17,000. What kind of trades would you want to take here?
Morning again, Prashant. So on the index, I'm still avoiding it, purely because of the fact that we're in the middle of the range and the overall bias is slightly negative. So I would still want to sell it at higher levels. Similar for the Bank Nifty. So I think on the index, we don't have a trade. But on the stock side, looking at a 1-2 day kind of a bias, we have some buy calls. HDFC Life and Divi's Lab are on the buy list. So Divi's, if you look at it, appears to have completed some kind of a correction and is trying for a reversal. That's a buy with a stop just below levels of 2,800. Look for targets around 2,910. And HDFC Life, of course, the stock bounced back strongly last week, and then we saw some kind of a pullback. It's picking up pace again. So that's a buy. Keep the stop just below levels of 487 here, and look for targets of 512.
All right, Mitesh, thanks very much for that. So those are individual trades, but nothing on the index, middle of the range, so wait and watch. Now let's shift focus to the commodity markets. Manisha is standing by with what she's got her eyes on. I believe copper, Manisha, right?
Oh, well, yes. Prashant, if you have to look at any sign or signal of demand growth or no recession coming in, then copper is your place to be. And we've seen positive cues coming in for this one. Last week, it was trading 8% on the higher side. We've opened the trade in the positive right now as well. So the copper prices are trading at a 3-week highs right now. Not out of the woods yet, because last year we saw all-time highs at $10,800 a ton. Currently, we're trading at 9,000. So really far away from those kind of highs. But the markets do believe that that we are inching towards that. Some of the factors which clearly have been supportive for the copper prices. One is the demand in China, which has gained up by 13% for copper in the month of Feb on a year-on-year basis. So China really consumes 50% of the global copper. So those numbers clearly are supportive. And then we also have seen increase in infrastructure construction in China. The home sales data from China and US both has been on the positive side. And the Indian market's also looking at infrastructure in a very big way there. On the production side as well, we are looking at some concerns here. Peru and Chile, which are the biggest producers, have had some concerns. Peru mining exports have declined by 20% in the month of Jan, year-on-year basis. The numbers from Feb also are not expected to be very positive, and that has been supportive. The Chinese demand could gain up by 4.5% is the view coming in from Fitch, so we have support coming in from those sides as well. If you look at the numbers, then last year wasn't so great. From all-time highs, we saw some correction, and by the time we closed the year, copper prices fell by nearly 13%. But this is the report card for this year. Jan opened on a very positive note. We saw Feb decline on the negative. And for the month of March, until now, 8% of gains is what we are working with. And those are very bullish statements then coming in from the industry. To begin with, we have Goldman Sachs saying that global visible inventories will run out by the month of September. And you will see very strong demand starting from the next quarter as well. Trafigura continues to reiterate that with the kind of demand that they are anticipating, copper could be hitting all-time highs yet again in this year as well.
Thanks a lot for that, Manisha. Well, let's focus on a couple of stocks then. The Pharma index we were telling you earlier today is doing a relative outperformance, and Lupin is up 2.5%. Ekta joins us to explain to us why the stock's doing well. Ekta?
Thanks for that. Well, yes, the news with regards to Lupin is that the UK regulator has completed an inspection of their Pithampur facilities successfully, which was inspected from 20th to 24th March. Remember, one of their Pithampur facilities has been under the US FDA regulatory radar, so that would be definitely a positive read-through. Separately, the US FDA has completed a pharmacovigilance inspection with no observations for Lupin. Now, the inspection was basically post-marketing adverse drug experience inspection of operations. What this basically means is that the inspection scrutinizes the practices and procedures of the company when it comes to reporting adverse events with regards to the products. So they have cleared it with zero observations. That's another positive coming through for Lupin. And just a couple of minutes ago, they received an approval for a tentative approval from the US FDA with regards to a particular drug which is related to the treatment of Parkinson's. And hence, that should be a definite positive read-through for Lupin.
All right, Ekta, thanks very much for that. Let's revisit Crompton, Butterfly Gandhimathi as well. Surbhi's got that one. Surbhi.
So why Butterfly Gandhimathi is in focus is because Crompton has announced merger of Butterfly Gandhimathi with itself. Just to alert, a year ago, Crompton had already picked a controlling stake in the company. Now, this scheme is subject to regulatory approvals, but if it goes through, the shareholders of Butterfly will receive 22 shares of Crompton for every 5 shares held in the company. And post the merger, the shareholders of Butterfly will hold a 3% stake in the combined entity. Now, the indicative timeline for completion of this merger is 12 to 14 months from now. Now, why Butterfly Gandhimathi is reacting is because last year, when Crompton bought the controlling stake, the value of the deal was 1892 odd crores, and the current market cap of the company is 2300 odd crores, which basically indicates that Crompton has paid 10% less for this transaction. Now, this morning, they held a conference call, and some key takeaways from there are that they've reiterated that they expect the transaction to be EPS accretive from FY24. They've also said that till now, they have realized the cost synergies of up to 18 to 20 crores. They further said that in the future, they don't expect all cost synergies to flow to the bottom line. Part of it will be reinvested in the business. They aim to grow the Butterfly business at a double-digit revenue growth. They also said that the current manufacturing setup will not be able to meet the demands for the combined entity. And further, they said that getting approval from the majority of the minority shareholders of Butterfly will be key for completing this transaction.